Welcome to the I Love Winnipeg Real Estate Podcast, your premier resource for buying, owning, and investing in Winnipeg's real estate market. And now, here's your host, Adrian Schultz, who loves all things real estate, property management, and mortgage financing.
If you have a variable rate mortgage and recent economic news has you thinking about locking into a fixed rate, here's what you can expect will happen. You can expect to pay a higher interest rate over the remainder of your term, while you could end up paying significantly higher mortgage penalty should you need to break your mortgage before the end of your term. Now, each lender has a slightly different way that they handle the process of switching from a variable rate to a fixed rate. Still, it's safe to say that regardless of which lender you're with, you'll end up paying more money in interest and potentially way more money down the line in mortgage penalties should you have to break your mortgage. The interest rates on fixed rate mortgages, they come with a higher interest rate than variable rate mortgages. If you're a variable rate mortgage holder, this is one of the reasons that you went variable in the first place, to secure the lower rate. The perception that fixed rates are somewhat safe while variable rates are uncertain. And while it's true that because the variable rate is tied to prime, it can increase or decrease within your term, there are controls in place to ensure that rates don't take a roller coaster ride. The Bank of Canada has 8 pre-scheduled rate announcements per year, where they rarely move more than 0.25% per announcement, making it impossible for your variable rate to double overnight. The penalties on fixed rate mortgages vary. Each lender has a different way of calculating the cost to break a mortgage. However, generally speaking, breaking a variable rate mortgage will cost roughly 3 months of interest, or approximately 0.5% of the total mortgage balance, while breaking a fixed rate mortgage could cost upwards of 4% of the total mortgage balance should you need to break it early and you're required to pay an interest rate differential penalty. For example, on a $500,000 mortgage balance, the cost to break your variable rate would be approximately $2,500, while the cost to break your fixed rate mortgage could be as high as $20,000, 8 times more depending on the lender and how they calculate their interest rate differential penalty. The flexibility of a variable rate mortgage versus the cost of breaking a fixed rate mortgage is likely another reason that you went with a variable rate in the first place. Now, breaking your mortgage contract is something that many Canadians do. In fact, did you know that almost 60% of Canadians will break their current mortgage at an average of 38 months? And while you might have the best intention of staying with your existing mortgage for the remainder of your term, sometimes life happens and you need to make a change. Here's a list of things or potential reasons that you might need to break your mortgage before the end of the term. Certainly worth thinking about before committing to a fixed rate mortgage. Potentially the sale of your property because of a relocation of a job. Purchasing a new home, accessing the equity from your home, refinancing your home to pay off some consumer debt such as credit cards, refinancing your home to fund a new business venture. Perhaps you got married and you combined assets and want to live together in a new property. Perhaps you got divorced and you need to split your assets and access the equity in your property, because you or someone close to you got sick, because you lost your job and potentially you got a new job, or you want to remove someone from the title of the property, or you want to pay off your mortgage before the maturity date. Essentially, locking your variable rate mortgage into a fixed rate is choosing to voluntarily pay more interest to the lender while giving up some of the flexibility should you need to break your mortgage. If you'd like to discuss this in greater detail, please connect with me anytime. It would be a pleasure to walk you through all of your mortgage options and provide you with professional mortgage advice. Thank you.
Thanks for listening to the I Love Winnipeg Real Estate Podcast. If you like this episode, please subscribe and give us a rating, which will help us reach more listeners. Until next time, connect with us on social media and online at ilovewinnipegrealestate.ca.